Hello guys, welcome to my channel. Today I'll be doing a market breakdown on EURUSD. And before I start, I would like to thank you guys for coming in, for tuning in on my channel and for tuning on my video. First of all, I would like to tell you guys I'm so sorry if my accent might not be of quality, if my video might not be of quality, but I'm trying along the line to improve my quality of video and my quality in content. But I pray you guys should stick to the videos. The most important thing is the most important thing should be the information, the content which I'm providing. Is it helpful in your trading or not? If you think it's helpful, you continue to watch my videos and continue to gain more knowledge. I am personally sure at the end of each videos you must have learned something. And so I will start always with the same tips I always give in the beginning. First, like on my previous video, I have a tip which I always give. When we look at a price action like this, when we look at this type of candlestick form where the candle wick is far more larger, longer, bigger than the candle body, price must always do its best to come back, be it in the near future or in the future far away, to fill back that wick. Because this type of candlestick form where the wicks are far more bigger than the candlestick body is what I call inefficient price action. So presently the analysis is on EURUSD. I'm starting on the monthly time frame, and if you guys can see, for us not to waste time and to be direct in our explanations, everybody is able to see that the price has been moving from up to low. That is, price is bearish, and price has always been reacting mostly on supply and demand zones. Understand? So first point, on the monthly time frame, price is bearish. It means there's a high probability of sell, especially when price is within a supply or demand zone. So as price has been moving and moving, we identify our demand and supply zones. So presently, let's come in. This is a general price. This is a general price detail. So here, and what is our main focus? We focus on previous price action. What has price been doing in the past, and compare it to what price is doing in the present to be able to predict what price will do in the future. That is the simple concept in trading. So based on what price has been doing in the past, price has been selling. Yeah, we see retracement, but on the overall, it has been retracing and be selling more and more downwards. So in the present, and where do we see reactions that forces price to really sell downwards? We see those reactions on mostly on supply zones. And presently, if we come into present price action, which is 2024, this is the most recent this is the most recent supply zone which we have here, and price got mitigated. Price got mitigated there once, and price came in there second time. And our bias is like here, price is always moving from demand to supply zones. If I go back in the chart, price always move within supply and demand zones. Supply to demand, supply to demand. Like here, from demand to supply to supply to demand. So, so our bias is very simple. Based on our monthly analysis, price is bearish. Price has entered again another supply zone. And since price is moving from supply to demand or demand to supply, we're expecting price from here at the end to react from here and at the end to sell up to this level. Since it's reacting from this supply zone, it should be able to sell up to this demand zone. That is our bias on the monthly time frame. So based on our bias is sell. So what do we do? I will go two time frame below and directly into the daily time frame. So our bias on the monthly time frame is sell. So let's go on to the monthly time frame to be able to let's go down two time frame below to the daily time frame to be able to directly spot what we can look for as buying or selling opportunities. So let's go to the daily time frame. Now we are on the daily time frame, and being on the daily time frame, we don't need to look at past price action obviously we have to look at price action, but not price action within this year, for example. Yeah, within a year, we look at the price action within a year since we're on the daily time frame. And looking at price action on the daily time frame, this is that 1 month supply zone price got mitigated from. If I go back to the monthly, people will see clearly. This is it. This is that 1 month where price mitigated from. So we'll go back to the daily. Being in the daily, price has been creating a higher high, higher low, higher high, higher low, higher high, higher low. Price came up, swept this high, and swept all the liquidity that was here, because this is exactly liquidity. This is exactly liquidity. Swept the liquidity and broke structure to the downside. See, structure was broken to the downside. It came back into a it came into a 1 week demand zone, and within this 1 week demand zone, we also have a 1 day demand zone. So we have a 1 week demand zone. We have this 1 week demand zone and this 1 day demand zone. So what is our trading idea here? Our trading idea here is simple. On the daily time frame, this structure liquidity, the movement of swept liquidity here, and then the very movement swept liquidity and broke structure to the downside, telling us now we're in a bearish market on the daily time frame. So on the monthly, we're on a bearish market, and on the daily, we're on a bearish market. So the, the two time frames are in the same direction, are aligning in the same direction. So on a long-term basis, we are looking for sales, but we have the opportunity of looking for short-term buys, because price is within this 1 week demand zone and this 1 day demand zone. So what do we do? It's very simple. Now we focus on this recent move from up here, which swept this structure, to the recent low, which broke the structure when we scale down to the 4-hour time frame. In scaling down to the 4-hour time frame, this is what we see. This is that 1 day. This is that 1 day demand zone. So we're focusing only from this recent high that swept structure in the left to the recent low that broke structure to the downside. What are we expecting? We're expecting to look for what, obviously, on a long-term base, we are looking for buys. Sorry, on a long-term base, we are looking for sales. But for sales to occur, we are expecting price to move up by moving up, creating a lot of liquidity, and to come back into this 1 day supply zone and sell right to our target right below. But in the meantime, we might also look for opportunities. There might be opportunity where price sweep out all these weeks here, all these weeks that in form of liquidity, sweep out all this liquidity and give us our entry to take a short term trade to be able to sell and cash profit on here. Understand? So that is our bias. So presently on our bias, that is what we are looking for. Price is very simple. Let me summarize everything. Price has entered a 1 week and a 1 day demand zone. Obviously, within demand zones and supply zones, these are areas where we see a high probability of price reacting. Price is already reacting, and there were opportunities here to take a trade. So, but now, demand and supply zones on higher time frames have a high more probability of providing a reaction. And since this is a 1 week time frame, and we're on Tuesday, we still have Wednesday, Thursday, Friday. There's an opportunity here for us to get a buy, but on a short-term base. Or if we are not getting the opportunity for a buy, we're hoping for price to retrace upward while sweeping out this liquidity which is here and coming into this daily supply zone and provide a mitigation to sell to the downside. So that is it. This is a chart I use for my analysis. I'll go to my personal chart which I map out for my trading. So going back to my personal chart, you guys will be able to see clearly. This is that mitigation. This is that 1 day mitigation. This is that 1 day supply zone which sits inside that 1 week. Sorry, this is our 1 day demand zone which sits inside that 1 week demand zone. And now what are we expecting? Obviously, on the 4 hour time frame, I'll have to go again 1 hour time frame below. That is the 1 hour time frame. So I want you guys to see the reason why we're expecting price to move forward, upwards. Here I'm expecting price to move upward simply because we have a lot of liquidity here. This is liquidity, 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 liquidity. So we're expecting price to move upwards to take out this liquidity. It might take out all, it might take some. But based on the amount of liquidity which is here, we're expecting price to move upward. But the problem is price. Price actually has formed a lot of liquidity here out below. So there's also a probability that price might also dump again. Price might also sell off again here to take out all this liquidity. And like I said, within this zone, within that 1 week zone, there was a possibility of taking a sell. This is that 1 day which was sitting inside that 1 week demand zone. There was a possibility of taking a trade. For example, here, for a trader who is trading with double top, double bottom, he had the possibility of taking a trade here and targeting maybe this week, targeting this week, with targeting this week, with this week. Why I always focus on week? Remember my concept of week. This week was created. The body, the body, the body is far more smaller than the week. So if he took, see, there was a possibility to take a trade, and there was a possibility of taking a profit, because we know that price might always struggle and fight to come and fill that candle wick. And that's what happened. That's a simple 1:3.8. Since our general bias on the long term is sell, we should have that in mind when taking a buy trade. That if we take a buy trade, we don't need to take a buy trade to target 1:14 or 15 at the moment. No, we are trading against the general bias of the larger time frame. So we have to take in this small profits 1:3, 1:4, 1:2, and we leave the market. So that's my analysis. Price might come here and sweep out this liquidity and start before going back up, or price might continue to go up, creating liquidity why it's trying to take out that liquidity, creating liquidity, and to come into this daily time frame. So guys, that has been my analysis on EURUSD. On the monthly weekly time frame, it is bearish. We should be looking for sales. On the daily time frame, we are expecting for retracement upward to mitigate this daily supply zone and to continue to sell. On the 4 hour time frame, we are expecting liquidity might be taken out, and for it continues selling, or it might go up to take the liquidity which you saw. So that's all for now. Thanks for watching, guys. Stay tuned to my channel. As I earlier said in the beginning of the video, it's my episode 2 of my channel. It's my second YouTube video. The quality might not be of standard. My English and my accent might not be of standard. Yeah, I'm not used to speaking on camera and so on, but with time, I'll get better. As they say, practice makes perfect. I pray you guys should have watched the video to this point in time, and I hope you guys did enjoy the content. Please try to subscribe, comment, and like. One subscriber, by subscribing, you have nothing to lose. I'll be updating market breakdown each week, 3 market breakdowns per week on GBP USD, on Euro USD, and at times on gold, guys. So stay tuned. Love you guys and stay blessed.